Alright guys, we're back. Check this one out. We got the Dow Jones probably about 10 days ago was the last time we've touched base here. And you know, in the last probably 5, 6, 7 days we saw a strong upside move, which makes it look like price may begin to move in an upside trend, right? Maybe the downside correction was over. However, I have to say that I don't buy it. I think that was a bullish trap. That's all that was. In fact, I think we're just about to reverse again, right, on the short-term perspective, but this time building up a significant downside segment. Because the way I see things, I think price was beginning on the downside move when it gave us here the first downside segment. Then it started to trade sideways. That was kind of that was the correction for this first downside segment. It just happened to be a sideways correction. And here's the situation. We had so far, take a look at how many legs. We had the first leg right here. Obviously, I mean, that was a hectic trading range, right? Very violent, very volatile. Basically breaking out of the system back and forth, but we filtered out with the weekly chart. We filtered out these moves and we made sure that they were all inside. So the system is very much valid. And you see there were 3 legs here. This is the 4th. And right now, this upside move was the 5th, right? So what I think we're going to have here is a turnaround, which would build up the 6th leg. And you know what the 6th leg is usually doing, right? It's usually breaking out of the system with the same direction it came from, which was from above, right? Now, it's interesting to see how just a couple of days ago, price had gapped. Take a look. Talking about the mid-high key level, now I'm referring to the black system, right? The local system. You can see how price gapped above 25632. This is the mid-high key level. Really nice gap. But it was unable to break above this major key level. This is a bigger one. That belongs to the big picture, to the big setup coming from the monthly chart, 25855. Take a look at that impressive spike here, and you can see what's happening right now as price begins to turn around, right? This may actually be the very beginning, the very tipping point of this upside move. I actually believe so. Now let's take a look at the bigger picture. It's actually even more impressive, to be honest, because here we have this huge trading range, right? We can track this one back all the way to the end of 2017. We already have 2 legs, actually. We are still in the middle of the 3rd leg, but we did not reach the very minimum level to be considered as a full leg, which is the 23957 here, or 958, right? This is the mid-low key level. But I think what gives kind of an advantage from a technical point of view to a bearish conviction was the fact that price closed. Take a look at this. Just a couple of weeks ago, the close below 24667, which is the mid-low key level of the local system, right? You can see how price was given a lot of respect at the beginning, just unable to break through. But then we had a couple of weeks ago, we had that close below, which suggests that price will continue on the downside, and what we've seen so far is just a sideways correction. Now, I think price can easily reach 23957, right, which I've mentioned before, but also to drill even lower than that and take the previous major lows around 23,250. And obviously that would reflect to the rest of the market, right? We're talking about Wall Street and the stock market. So I think we're going to enter a negative sentiment or negative momentum kind of period right now. It should be fascinating to see how things will unfold here. I will definitely be here to keep you updated. All right, that's about that for this one. Till next time, be well.